Today I want to share a truth that is simple, obvious, and still painfully expensive. Experience does not make you immune to mistakes. It only makes the mistakes more subtle, harder to notice, and therefore more costly. You may have survived a few cycles, you may have booked some big wins, and then you start thinking, I understand the market now. Sound familiar? That exact moment is when risk quietly sits next to you and whispers, this time is different. And remember, the market does not care who you are, whether you are new or seasoned. It responds in numbers. Keep a journal. Your reason for entry, your defined risk, your plan for exit. Review it every week and you will start to see repeating patterns. The more experience you gain, the more humble you must stay, because the market always finds a new way to teach a new lesson, and it teaches quickly. Mistake number 1 is overconfidence. You win a few trades, you catch a bottom, you take profit at the right time, and you begin to believe it was pure skill, not a favorable environment. You forget that sometimes the market gives you an A simply because the test was easy. Then you quietly increase size. You increase exposure. You stop checking assumptions. You stop asking hard questions. And when you stop asking hard questions, the market asks them for you, through price. Here is a practical habit I want you to adopt. Every time you feel the urge to buy more, ask one question. If I had zero position right now, at this exact price, would I still buy today? If the answer is no, but you keep holding because you bought earlier, you are no longer investing. You are protecting your ego, and ego never pays the bills. Your portfolio does. Mistake number 2 is having no risk rules written in numbers. Many people claim they manage risk, but what they really mean is, I will be careful. Careful is a feeling. Rules are a system. A system needs numbers. Before you enter, you must know what you are willing to lose, what level makes your thesis wrong, and what you will do if the market moves against you. In crypto investment, a great thesis can still become a terrible trade if your position is too large. Position sizing must be designed so that one mistake cannot erase months of work. I like this line. No one goes broke because there are not enough opportunities. People go broke because there is not enough discipline. You can miss a big move. That is fine. You do not need every wave. You only need to stay alive long enough to catch the waves that truly belong to you. And to stay alive, you must cap losses. Some days you accept you are wrong and step aside. Some days you do nothing. Doing nothing is also a decision, and sometimes it is the best decision. Mistake number 3 is misusing leverage. Leverage sounds exciting, faster, bigger, more dramatic. But leverage does not make you better. It only makes your mistakes bigger. Many experienced investors use leverage not because the setup is truly exceptional, but because they are bored, or because they want to make time back. They want a feeling. They want adrenaline. They want their portfolio to dance. But the market is not an entertainment venue. The market charges you for chasing thrills. If you use leverage, do it like someone extremely serious. Only when volatility is low relative to your edge. Only with a clear exit plan. And only while accepting you can be swept out in a single move. If your plan is, I will manage it when it happens, that is not a plan, that is a prayer. Mistake number 4 is chasing a narrative after the pump. You know the feeling. Social media explodes, everyone is talking about a new story, the chart is green, you feel late, and you buy to erase discomfort. That is not a decision. That is a reaction. And when you buy as a reaction, you are often buying at the exact moment early buyers want to sell. You become liquidity for someone else. The fix is simple. Separate a good story from a good entry. The story can be right, and the price can still be wrong. The thesis can be correct, and your timing can still be awful. Make a rule. If you did not plan the entry before the hype, you either enter small, wait for a pullback, or pass. Passing is a win, because it is a win over FOMO. Mistake number 5 is overtrading. Overtrading is rarely about strategy. It is about emotion. It comes from wanting control. You want to feel like you are always doing something. But in crypto investment, the market is open 24/7, which means you can always find an excuse to click. The problem is that activity is not progress. You can click all day and still lose if you do not have real edge. Create a schedule. Define no trade zones. Give your brain room to breathe. Because attention is your most valuable asset. If you spend it on meaningless trades, you are selling your future to buy a quick hit of dopamine today. Mistake number 6 is ignoring liquidity and slippage. This one destroys people quietly. You assume you can exit whenever you want, but liquidity disappears exactly when you need it most. Your stop may not fill the way you imagined. You hit sell and slip far lower than expected. Then you call it bad luck. No, that is market structure. If you play in smaller assets, your size moves price. You must look at volume, order book depth, spreads, and realistic slippage, especially in panic conditions. Professionals do not plan for profit and forget the exit. The exit is the hard part. Mistake number 7 is excessive concentration. You say, I have conviction. Good. But conviction must not become blindness. A portfolio does not need 30 positions, but it also should not have one position that can wipe out everything. The rule I want you to remember is this. No single idea is allowed to destroy your long-term trajectory. Concentration is a tool, not an identity. Mistake number 8 is failing to rebalance and failing to take partial profits. When price rises, you feel smart. Selling feels like stopping the win. But markets do not pay you for being right. They pay you for managing exits. Taking partial profits does not make you weak. It makes you durable. Rebalancing does not make you miss the top. It keeps you from losing everything after the top is gone and you are still dreaming. Use a clear framework. When it runs hard, take some off. When a winner becomes too large, bring it back to a safer weight. And if you truly believe long-term, keep a reasonable core. In crypto investment, this is the difference between I caught the move and I round-tripped the move. Mistake number 9 is security and custody. Many smart investors ignore this because it does not feel financial. They study charts, news, strategies, then get careless with wallets, seed phrases, contract approvals, and platform risk. The market may not take your money, but one careless click can. There is no stop loss for a leaked seed phrase. If the amount matters, use a hardware wallet. Separate hot and cold. Revoke approvals regularly. Do not sign blindly. Treat security like brushing your teeth. Routine, not panic. Mistake number 10 is taxes and hidden costs. People focus on paper profits and forget that fees, funding, spreads, slippage, and taxes can eat the entire meal. You do not need to become an accountant, but you must stop being surprised. Track trades. Understand the rules where you live. Avoid strategies that only work before fees and taxes. In crypto investment, net returns are the only returns that count. Now let's finish with a 60-second checklist. Before you enter, answer quickly. 1. What would make my thesis wrong? 2. What is my maximum acceptable loss? 3. Is this trade planned or emotional? 4. Can I exit realistically given liquidity and slippage? 5. Am I operationally safe? Wallets, approvals, and platform risk. If you cannot answer in 60 seconds, you are not ready to size up. Here is the beautiful part. You do not need to be smarter than the market. You just need to be more disciplined than the worst version of yourself. The long-term winner is not the person who predicts correctly the most. The long-term winner is the person who avoids repeating the same mistakes. And that is what we do at the Crypto Compass. We do not chase miracles. We build systems to survive multiple cycles of crypto investment. Thanks for listening. Save this, share it with someone who tends to FOMO, and I will see you in the next video.